Personal Finance Practice Problem using OneNote. Financial Statement and Budget Part 2 Income Statement. Prepare to get financially fit by practicing personal finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're down here in the Practice tab as opposed to the Example tab. The Example tab, in essence, being an answer key. We have the information on the left-hand side. Going to populate that into the blue area on the right-hand side. Last time, we took a look at the balance sheet. This time, we're going to be focusing in on the income statement. And then next time, we'll be running a report for the budget versus the actual financial data that we're using to create the financial statements. Is up top, and then down below is going to be the budgeted information that we will use when we get to the budget versus actual report. Last time we got the balance sheet, assets, liabilities, and equity, remembering that the net worth is kind of like the equity section of the personal balance sheet. If we look at the income statement, that's the story, that's the performance statement. And when you're thinking about budgeting, you need the performance statement because that's the one that can actually kind of judge. You can judge your behavior in the past and try to make a plan for your behavior in the future so that you can get to another end result, which would be the balance sheet a month later or a year later or whatever this case may be. So let's go ahead and hide some cells first. I'm going to hide some cells from C to G. I'm going to put my cursor on the column C up top, left click, and drag on over to F. And we'll leave G there, and then right click and hide those cells. And then this is where we're going to put our income statement. It's going to be an income statement kind of on a cash basis. Remember that as we construct these financial statements, you need to think about what's going to be your system for making the financial statements. Are you going to make them with accounting software such as QuickBooks or OneNote or Wave Accounting, actually recording the financial data? Or are you going to try to compile them possibly with some other financial software, like financial software that can take the in numbers from financial institutions, but isn't so good at pulling in kind of the income statement and tying it together with the double entry accounting system? So whichever method you use, you're going to have to get an idea of the accrual method and the cash method. Typically, we'll be kind of more on a cash basis method when we're thinking about our personal budgeting oftentimes, but there are certain accrual components that we have to take into consideration. They will become more apparent when you basically do actual accounting if you were to enter the actual financial transaction by transaction. So we'll try to point those out as we go. We're going to make an income statement, and it's going to be basically on a cash basis, which I'm going to indicate here. Cash basis. So I'm going to make this black and white for our header by going to the Home tab up top, Fonts group. Let's make this black and white so it stands out for the header of the income statement. So we're going to pull our income statement from the data on the left-hand side, remembering that basically the income statement generally has two major components that you're thinking of. You got the inflows, and then you have the outflows. And then the outflows are usually where the most of the information is in terms of the number of accounts, because the income, your income is what you specialize in and do one thing. Hopefully the amount is greater than the expenses, but you only do one thing generally to get the income. Then everything else you do, you pay for, and that's going to be the categorization of the expenses. Now, on the expensive side of things, we might then categorize them differently than we would see basically in a business setting, because the objective is different. So remember, that's where you have the most kind of leeway, where you want to think about, what do I actually want? How many expense accounts do I want? Do I need, do I need standard expense accounts? Do I want fewer or more expense account details? And you can also think about how you want to structure them in terms of possibly sub-accounts, and or if you want to break them out in terms of the behavior of the accounts, such as fixed types of accounts and variable types of accounts. And that could be useful for your budgeting type of situation. So when you think about budgeting, breaking out between fixed and variable is typically something done on the business side for a manufacturing side of things, because it helps you to kind of budget into the future. So that's what we'll try to work with here. We'll try to break out in our cash flow those cash flows that are going to be more fixed cash flows and the cash flows that will vary, and we'll use that kind of detail to make our budget assumptions as well. So we're going to start off here with our income. I'm going to take the net monthly income. Remember, you kind of have an option between these two, because if you're a W-2 employee and you're trying to think about your monthly income, you could say my actual monthly income, we're going to say, is the $3,800. but my employer took money out of it before I even got my hands on it, because they're usually required to, at least for regard to taxes. So they took out the federal income tax, the Social Security, and the Medicare, and possibly paid for things like a 401k plan and and maybe health insurance or something like that. So you could put it on gross, which you would get from the pay stub, and then record the expense of the taxes you're paying, and then possibly that cash outflow for other benefits. Or you could just say, hey, I'm just going to start with net here. That's already been taken out. I'm just going to start with net. So that's kind of the easier thing to do. So I'm going to say this is my net earnings. Remembering that if someone asks you how much you earn, this number monthly or yearly is not going to add up to your salary. If you get paid, for example, $60,000 a year, this isn't going to add up to, because you're taking the net amount, and they took out withholdings, at least for taxes and possibly for other benefits. All right, so then we got the cash outflows. We're going to say cash outflow, and I'm going to say shift 9, and I'm going to make another subcategory, which is going to be the fixed outflow. So I'm going to say fixed outflows. And I'm going to indent that by going to the Home tab. We're going to alignment and indent. And I'm going to look for my outflows down here and try to categorize the things that are fixed in that, meaning it doesn't matter what happens to my revenue here. I'm going to, in essence, pay the same amounts. In other words, for example, I don't have any control over them is another way you might want to think about it. Things like the rent, I don't have any control over it. That's the classic example. I've already signed the lease. It is what it is. It's going to be the same each month, no matter how much time I spend in the house or outside of the house or whatever. I'm going to have to pay the rent at the same amount. So I'll call that fixed. So we're going to say the rent. Where did I put? That's going to be the fixed, the 420. There it is, the 420. We'll call that a fixed item. And I'm going to put that in the inner column here at the 420. And then we're also going to say that the credit card payments are going to be fixed, which may not be fixed completely. It depends on your situation in terms of your loan. But if you have a loan outstanding, you might say, hey, I'm going to make the same monthly payments, each month on the credit card. If your credit card balance, you have a balance on it, and you're trying to basically make a monthly payment and trying to say, this is what I'm going to pay each month, and I'm going to make it a fixed thing that I'm not going to be changing each month, then we might put it up top. Also note that when we look at this, we're really looking at kind of a cash flow type of thing, because the payment on the credit card, from an accrual standpoint on the income statement, will have an expense side of it, which will be interest expense, and a decrease to the credit card balance. So if you were to record this from an accounting standpoint, transaction by transaction, then you'd have to deal with that issue, that kind of accrual kind of issue, breaking those two things out or adjusting periodically. Here, we're just going to have the cash outflow for our budget purposes. So we're going to say that's going to be fixed. We'll say credit card payment at the 165. And then we're going to say the car insurance is also something that we're going to put up here as fixed. So the car insurance is down here at that 210. We're going to assume that the car insurance is going to be the same each month. So we'll just say it's going to be the 210. It is what it is. So we'll say that is the 210. We don't have any control over that. We're just going to pay the car insurance. Now, in actuality, you might look at some of these other ones and say, well, there's kind of a fixed portion. Like, you could get more detail and say, well, what about the water? I know it varies over a certain amount, but I think there's a baseline to it. And you could even get more detailed in your budget and say this is the baseline or something like that, breaking out the fixed and the variable portion of things like utility. Meaning you might say this is the baseline of utility and this is how much I have control over. But that gets somewhat complicated when you're breaking up expenses between a fixed and variable. So I'm going to say these are really the hard kind of fixed costs that I expect to be the same. I'm going to indent them twice, Home tab, alignment, indent. And the ones which would include, I would say, kind of mixed costs and the variable costs down below, the ones that I have some control over, I'm going to categorize separately down below. So this is going to be the total then. Total fixed outflow. Put this in the outer column using our trusty sum function equals the SUM shift 9 up arrow, left arrow, holding down shift up, up. There's the formulae. So let's do that again. Now I messed up the formulae. So we're going to select these items and there it is. And now that thing moved up there again. It's doing it on purpose. It's trying to drive me crazy. And then we're going to go to the Home tab, font group, and underline. And then we'll indent this 2 times. We'll go Home tab, alignment, indent, and indent. And one more time, indent. So there we have it. So then let's say now we got the variable expenses. So I'm going to say variable expenses, or we could say outflow might be more consistent since we use that up top. These are basically more of the expenses. Home tab, alignment, indent. Let's indent that one time because it's still really an indentation of this cash outflow. And then it's a sub indentation because we're going to have another indentation for the variable cost. So notice we're going from like a single step income statement, which just has income minus expenses, two main categories, to something a bit more complex, breaking these categories out not by account type, such as utilities and having subcategories in there, but by whether they're fixed costs or variable costs. So then we'll bring in the food here. So we'll say food. I'm gonna put these in kind of a random order. So note that the ordering down here, you might put it from the largest to smallest type of accounts if you're just compiling this. If you were doing this in software, it would, within a category, usually put it in alphabetical order unless you used account numbers to force it to go one way or the other. So there's no rule convention where you have to do it one way or the other as long as it's in the correct category. A general concept would be the more important things you want up top. Oftentimes, the more important things are the ones you spend more money on. So we got the food. And I'm going to pick up the shopping down below. For some reason, I'm jumping down here to the shopping. That's going to be the 320. So the 320 on the shopping, on the variable cost. And then I'm going to go to the electricity, which is here. And that's going to be equal to the 240. Now note, with food, you might call it a mixed cost because there's a baseline, but you would think you have some control over food. If I'm thinking of just kind of miscellaneous shopping, like my kind of frivolous shopping, maybe I'm thinking of that category, then that's when I have kind of complete control over. I can vary that one up and down. Electricity traditionally would be a mixed cost, meaning I have some control to not turn on the air conditioning and whatnot, but there's going to be usually some kind of baseline electricity that I've got to spend generally for normal conditions. And then the water, same kind of thing. Utilities typically are traditionally kind of a mixed cost. You think of them having kind of a baseline, and then you have some flexibility over that baseline to control them. And then we got the cable, and that's going to be something that now notice cable, it might be fixed in that your payments are the same and you've committed to be paying cable. Or you can cut the cable, right? So if you choose to have cable, it might be kind of a fixed thing unless you were to cut it. Usually it would be the same basically each month. And then we're going to have the auto expense. I'm just going to call it auto expense. So expense, which would be things like gas and maintenance on the car, which we put down here. I think we called it gas and maintenance. 320. I'm just going to call it auto expense. That's another one where we might have control over at least gas, if we're depending on what we're doing with regards to our entertainment time. Obviously the gas related to our work might be something that is required and therefore somewhat fixed. We might have a baseline again. So then we got, this is going to be equal to the entertainment, which I'm going to pick up the concerts down here and the movies. I'm just going to put into entertainment. Clearly that's one where we have a lot of control over. It's pretty much completely variable in terms of how much we want to spend there. So we're then going to go up top. We're going to go home tab, alignment, indent, and indent. Let's go here, and then home tab, alignment, and underline. And notice when we're thinking about variable, usually variable, if I was making things, is tied to the level of production. Meaning, if I had my hamburger stand and I'm making more hamburgers, I'm selling more stuff, that's a good thing. And my costs would go up in relation to that, meaning I'd have to buy more meat and burger buns and whatnot in relation to the number of sales. These, of course, aren't a direct relationship, but you can imagine things like entertainment and whatnot going up as income goes up. You could set your budget to kind of coincide and say, hey, this is what, I'm going to try to increase and decrease in relation to my income levels if my income levels are changing. Okay, so that's going to be then the total variable, variable outflow. And let's put in the outer column using our trusty SUM equals SUM, shift 9, up arrow, left arrow, holding down shift, picking up these items. And let's bring this one down so we could see it. So there it is, and enter. Let's indent this one 2 times by going to the home tab, alignment, indent. and indent, and 3 times, indent again. There we have it. Now also note that you might have other subcategories that you might put in here, that meaning you might say that, for example, these 3 might be under utilities. So you might make a subcategory of utilities, put these 3 under it, and then categorize them outside as utilities. And by doing that, you can get a total for the utilities in total, as well as breaking out the electric, water, and cable. But notice, if you do things like that, you're going to get, your report's going to get longer and longer because you got 2 extra columns every time you do that. So just realize these subcategories are useful, but more subcategories that you put in there, you get more detailed, but it also adds a level of complication that you both have to then think about when you analyze the financials and think about when you basically create the data, which becomes more complex as well. So home tab, font group, and underline, and then this is going to be our basically our cash outflow, and I'm going to put this in the outer column here. And so now I'm going to sum up these 2 items. We have our 2 kinds of outflows. We have the fixed ones, which we don't have much control over. We expect them to be the same each month, and our variable ones, which at least we have more control over, and that's where our decision making can come into play a little bit more clearly. So we'll sum these up. Notice there's a lot of blank cells. Is that a problem? No, that's not a problem. And then we're going to go to the home tab, font group, and underline. So there we have that. And let's call this the total cash outflow. So we'll have that. And then that's going to be the indent of this item. So we might indent that, say maybe 1 time, alignment indent. And then in the outer column, or maybe 2 times, we can do a 2-time indent there. And then we're going to have the surplus, which we'll call surplus, or in essence, net income, the bottom line of the income statement. In the outer column, we're only doing this thing, something to the outer 2 numbers now, the top line being the income, the bottom line being all the outflow or expenses in essence. So we got the 3,200 minus the outflow. That's going to be the 485. I think we have an extra cell here. I'm actually going to, I don't think you have this cell, so I'm going to select that and just close that up, and I'm going to move these up just a bit here so we can say that that's already done for you most likely. So there we have that. So there's basically, in essence, our net income. You might double underline that by going to the home tab, font group, and here we could double underline. And then just to round this out, we might have monthly savings that we're putting in as well. So notice, you could think of the monthly savings as something like, you might say, I want to make a fixed savings and put it up in the cash outflow here and say this is something that I just plan on doing. Although, note that the savings aren't really an income statement item, because although they're a cash outflow from a cash basis kind of cash flow system, they're going out of your checking account and into the savings account. But it's kind of useful from budgeting to kind of think about your fixed amount that's going to be coming out of your income, so you can commit to that happening, or even have it taken out of your top line number by your your work before you even touch it, and that can help your budgeting. But we're going to put it down here. We're going to say then we have our monthly savings that we had here, and then other savings that we're going to try to standardize, and that's going to be equal to the 285 and the 130, and we're going to try to make those 2 things be somewhat standard items, and we want to put them down below because really they're not really expenses, although they're kind of cash flow in the sense that they're coming out of the checking account. And so that would then, if I underline this, that would give us our net surplus. And let's just call this, this is in essence net income. Let's call this just net income. And then we've got our net surplus, which would be equal to, I'm going to take this 485 minus the 285 minus the 130, meaning the 485 minus the 285 minus the 130 means we're left with 70 that we still have a surplus on, which we can either put into or leave in our checking account increasing, or we could put that then into our savings account. So that's going to be our general kind of income statement. Let's do a good old spell check. Outflow is spelled wrong. Outflow's really spelled wrong. Variable is spelled wrong. Okay, that's not too bad for the spelling. I've done worse. So there we have it. Next time we'll go to the budget versus the actual. Also, just realize you can format this income statement again in multiple different ways. But we broke it out between the fixed and variable. That can be useful, but you might have other breakouts in terms of your categorizations down here. Sometimes it's useful to make an income statement just in terms of your breakouts by category and then put it into a fixed and variable portion so that you can use that format for budgeting. When you think about the corporate side of things, normally you have a normal income statement, which is in accordance to generally accepted accounting principles and accrual kind of concept. And then when you do the budgeting, you might then do, or some projection analysis, you might put it into what they call a contribution margin kind of income statement, a break-even analysis, which would look more like this, so that we can break out the cost by behavior, and that makes it easier to kind of project what can happen in the future where we have control or may not have control.